So let's talk about tax rates for self-employed individuals. Sole proprietorships and single-member LLCs are taxed the exact same way at the individual level on their personal 1040. And that means that there's no federal income tax paid at the business level. And the same is true for state taxes. So that means when you file your individual Form 1040 like you do every year, you'll include Schedule C, which will list your business's income and expenses, and the net result is your business's net income, which is what you're taxed on. But here's the ugly part. As a small business owner, you're the employee and the employer. So you're subject to 15.3% self-employment tax, which represents Social Security and Medicare. And you're also taxed at ordinary federal income tax rates, which increase as your household income increases. Your ordinary income tax rate will depend on where you land on this tax table. Depending on whether or not you're married and how much total income you and your spouse will earn, will determine the tax rate that will be applied to your next dollar. Remember, the first $9,875 of income is always taxed at 10%, even if you're a millionaire. So your tax bracket will determine what tax you pay on your next dollar of income, not all of your income. And because that 15.3% self-employment tax on your business income is added on top of your ordinary income tax rate, it can add up to a lot of money. So it can be a real shock, especially in the first year doing your taxes as a business owner. And don't forget about the state and maybe even local taxes that your business might be subject to. If you live in a state with zero income tax at the state level, you won't have to worry about any income taxes. But most states have an income or a business privilege tax at the state level and sometimes even at the local level as well. So ensure that you talk to other business owners, your lawyer, your accountant. Make sure that you're covered on all taxes and you understand what kind of tax is being assessed by who and how much the tax is. That's why I always suggest saving at least 30% for taxes. Stash it away. Pay it in as soon as you can. Just ensure that you don't spend it right away because you don't want to get behind on your income taxes. Taxes stink. No one wants to pay them. That's just part of the cost of doing business. So factor taxes into every cash flow projection that you do for yourself and for your business because they'll be due every year. If you found this video helpful, we're real accountants and CPAs who work with hundreds of small business owners just like you every day. Check us out at engagecpas.com to see if we're a good fit for your business. We also have business courses available to help small business owners understand their business. They're for you to learn about your financials, your taxes, how to pick the right entity, tax myths, and everything else about your business. Learn at your own pace. Check those courses out on the Education tab on our website. You can also find us on Instagram at Engage CPAs.